Hello folks, my name is Eric Wilkinson with ProTrader Strategies, and this is my daily market commentary where I'm going to go over the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I also have some webinars like yesterday. We just did one on the cash secured puts where I streamlined the process for you folks in order to find the optimal option strategy for any given assumption. We even talk about how to implement options into a portfolio of basic stocks. So if you are looking to add a stock to your portfolio, maybe this cash secured put webinar that I just did yesterday on the roadmap to trading options, cash secured puts, could be something to implement into a portfolio, and rather than just going out there and buying stock on any given day. All right, so without further ado, let's get on with the economic data across the pond. We got Great Britain's gross domestic product, GDP, coming in better than expected at 2.9%, but on the flip side of that, Great Britain's industrial production and manufacturing numbers missed quite a bit. Industrial production coming in at negative 1.5%, expected to be 0.9%, and the manufacturing production was supposed to be a negative 1% expected, and then it came out as negative 2.3, so really missing on those two numbers for Great Britain. Then back here in the United States, we got PPI, which is Producer Price Index, coming in better than expected at 0.5%, expected to be 0.4%. And then core PPI came in right in line with expectations, and that's going to exclude food and energy. All right, so let's get on to crude oil, moving a little bit higher today by 3 cents. Everything is pretty close to unchanged the last I checked, and we got the bonds just, well, I guess bonds aren't close to being unchanged, but they are down 2 points and making this continue to onslaught of higher rates coming into the markets. And then we got Bitcoin. Bitcoin may be topping out after making another all-time high. Yesterday it was looking like we were going to get a topping pattern here with a confirmation, but you can see we opened up a little bit higher than we currently are, but that's again making another bit of a topping pattern here. It's probably going to have to wait till Monday to get that confirmation. Here we have the gold futures though, and the gold futures are setting up a little bit different, as we usually would say that this is a topping pattern. It did get above the 9-day simple moving average, and then today we've got another type of doji where we've got a spinning top doji and a hangman doji right next to one another. Those usually will be considered a continuation pattern unless they're maybe at the top of a move or bottom of a move. That's not where we are right now. We're kind of in the middle of the sell-off with maybe a recovery. We're still considering it as lower lows, lower highs, so very bearish, but this move could get a little bit of a correction in gold futures. And I don't know why the VIX is out of order here, but you can see the VIX is slightly off on the day. And we've got the Dow Jones Industrial Average up 100 points, 150 on the day, basically inside day right now. This pattern yesterday was really a continuation pattern. Today, really not giving us much insight on the candle there. The NASDAQ down 182 points, so still seeing that sector rotation out of tech and into some of the blue chips. But the NASDAQ right in line with this trend channel from 2017, or trend line 2017, trend line 2018, trend line. That is right in line with what we're seeing. So that is actually a trajectory that is very healthy for the markets here. And then we got the E-mini S&P is down 10, but that's pretty close to being unchanged on the day. And then, as you can see, overnight inventory pretty short, no real attempt to get those out. So I would say the market is relatively short. So we could see a bit of a push to the upside by the end of the day, but it just feels like today is going to be one of those days where it's just really quiet. All right, cash secured puts. I mentioned this at the beginning. We were talking about that with the roadmap to trading options. Apple has had a nice little pullback here, and we are very close to the points of control on this, which should be where the market, or is where the market actually finds value. And that is where the most time and volume is transacted, so that's why it is considered to be the place where value is set. Having said that, I have decided if we get much more of a pullback here, I want to add Apple to my portfolio around 100 or just slightly higher than that. So I did two separate trades in here for the possibility of a pullback in the next basic 35 days. And I sold the April. So this is not in line with my normal trades for selling options. As you can see here with the implied volatility is relatively low for itself. So one would generally consider going out and buying calls, but this is something different because my thought process is here. I'm finding good price location here. I want to add Apple to my portfolio. Therefore, I'm not going to consider the implied volatility as much as I normally would for any given trade on selling options. All right, folks, this is a different strategy where I am looking to try and add Apple to my portfolio. And rather than going out there and putting a limit order in around 110, which is where I think I want to buy this, just slightly above this 61 Fibonacci, those two areas are very interesting to me to add to a portfolio. So would I go out there and put a bid in the market and just leave a GTC order in there to get hit? No, that's not the way I play this game. The way I play this game, if I want to add something to my portfolio, I'm looking to sell puts. And therefore, I went in and sold the April 110 puts in there for $1.80. And then I also, and I did that small, I went out, went further down and sold the 105 puts in there for $1.04. So both of those trades were added this morning, right after one another, basically within seconds. So I sold the April, like I said, 110 puts. So I would be willing to buy Apple at 110 or 105. Dollar cost average on the way down, great strike location, just above the Fibonacci here, and the other one just slightly below this value area where time and volume has been spent. So I can buy it below where that is. Should want to migrate back there, that's where I want. And I think that we're actually going to see newer highs happen. I would like to get, obviously, put that stock before that happens. If it does go up there, then I'm happy to take my collection in credits for this trade. All right, so that's where I've done cash secured puts in Apple. Trying dollar cost average, try to get it at 110 and 105. Hey, if you're putting limit orders out there to buy this and they're GTCs, this is something maybe you should consider, because cash secured puts, you do have to put up that money in order to buy the stock. So that's what I've done here with this trade, looking to add it into my longer term portfolio. All right, and if we get that, then we'll start looking at covered call strategies like we did with IBM and a couple other trades, Penn, where I've lowered the overall cost basis to 0. All right, so that's all I've got for you guys. I hope everybody has a great weekend. Also, take a moment to go over the disclaimer. As we're an educational company, I'm not here to try and get you guys to do these trades that I'm doing. What I'm trying to do is offer you solutions that you can implement into your portfolio, and I do webinars to streamline your process to find the optimal option strategy for any given assumption. All right, so if you can't take that, take it easy.